All right. Let's get the microphone check out of the way before we get started here as the timer runs out on me. Let me know if you can hear me across the various chats, including the public streams, which are going on Twitch and YouTube. So if you can tell me if you can hear me okay, and if the audio is all right, we're going to turn the music down and we're going to get started here in just a moment. All right, so thank you all for letting me know that the microphone is good to go across the various streams. And we're going to get started in just a second here. Let's make sure I got the right templates up to switch over to. And get the music actually stopped in the background for myself. All right, cool. Let's roll on into this. Hello and welcome to Landy's Crypto Corner. Today is Market Madness Technical Analysis Wednesdays. That's a mouthful to say, actually. Might have to change that name, but welcome nonetheless to Landy's Crypto Corner. My name is Landy. I am your host today. And today is November 29th, 2023. So we got one more day until the close of the monthly candle for, well, everything. So we're going to look at Bitcoin, of course, today. And we are going to start even on the Bitcoin in 60 seconds chart. If you watched yesterday's Bitcoin in 60 seconds video, which is, of course, a short video in the shorts feed specifically here on YouTube. If you don't find it in your feed, you can always visit the channel and click on the shorts tab and you should find the latest video there. Or you can visit x.com, formerly Twitter, and you can follow me at CryptoLandy, and I will pin, and usually do pin, the shorts videos there and upload an independent version of the shorts videos there as well. You'll note that yesterday I did concentrate on calling out some of the upside targets here, and we have seen the upside target at the upper second standard deviation of the Bollinger Bands right here at the monthly at around 38,500 hit in today's price action. Now, if Bitcoin continues to close in and around this weekly and upper first standard deviation on the one-day chart, which is at 37.7, then I would look for this monthly and upper second standard deviation to continue to get ran at around that 38,500 to that weekly above, if it can break out above that monthly, at $39,000 to $40,000. Now, if Bitcoin does pull back below 37.7, keep an eye on the basis band somewhere around $37,000. Below there, I would look to the lower first at around 36.5 to the weekly at 36.2. And if things do break down from there further, I would look to the lower second, which is coming in line with this close open structure right here at around 35,750. And you can take an intermediate target at around 35.5 at this close open over here from mid-November. Below there, I would look right back to the monthly by the lower third here on the daily chart for the Bollinger Bands at $35,000, and just below there to the weekly at 34,750, where this spike low from mid-November came in. Excuse me. So pretty simple setup. This is very easy stuff. All right, I'm seeing a lot of like hand wringing and a lot of nervousness all over crypto Twitter or crypto X. I don't even know what it's called anymore. And also YouTube. And some various other platforms, including Telegram, where people are really getting nervous about this price action. And quite honestly, this is high-level consolidation. It's still an uptrend. Now, I will say that the danger is for Bitcoin here in terms of pullbacks is that it could change daily structure. Why? Well, all these closes are coming in below the mid-November close over here on the 15th, which was at 37,885. So these are technical lower highs, and we do have a very close higher low on a close, specifically coming in at 37,240. Now, if the wick low is specifically taken out on a close, then we would have a trend shift on the daily. Does that really mean a lot right now? Not really. It's consolidation at that point. I would still be looking in the local range unless we saw this weekly here at 34,750 begin to break down. Then we can start looking at the low side structure where, if this does break somewhere around this close open down here at, what was this close at? Around $33,900 to $34,000. And then specifically start taking out that wick low at 33,400 to 5. Then, eyes on some lower targets. But for right now, I would keep it simple. Bitcoin is still trapping between the two monthlies here. To the downside, $35,000. Yes, wicks can be thrown down to that weekly again. And to the upside, the monthly at 38,500 to the weekly at 39 to 40K. Now, this weekly specifically is coming in at $39,000. I am giving it a bit of room, as we did see closes kind of come in all over the place, because this was from the downtrending weekly structure. This was it was the high on the daily all the way back here. The weekly from the move off of the reaccumulation and Wyckoff's structure that was built in 2021 that led to slightly higher highs on the longer term timeframes before the bear market collapse there. Now, this is going to be a little dicey for Bitcoin in this area, but realistically, I'm not. I've been getting a lot of questions like, am I concerned about this dropping down to some of these absurd low targets? From here, no. If we start to see structure change, then we'll update our targets to the downside, right? But we got to see trend actually shift first. I do want to make note that the Stoke, which is a regular Stoke, not a Stoke RSI, so this is close over close price action, is still in the bullish control zone. And the pivot is at 37,900. And you'll note that, as Bitcoin has kind of gone sideways and up in this higher low fashion, even though there is a couple lower highs on a close, Stoke has kind of flipped around. And this is pretty typical when you see this kind of a structure. We're really looking for the bullishness being Stoke staying in the bullish control zone or even coming down to the midline, and then getting back into the overbought zone. We typically will see the biggest moves come when Bitcoin is in this overbought zone. So we see it gets overbought, stays overbought for a while, and that's where we see a big re-expansion to the upside here, or continued expansion to the upside to go test that upper second standard deviation, pull back to the Bollinger Band basis here, and even trying to get down to that lower first, but didn't quite make it yet. And then we see a compression. So this is, we see a slight compression in this area, and then we're starting to see a little bit of re-expansion after Bitcoin closed above that upper first. So if it can maintain closures above the upper first, this is still considered an upside expansion structure. Now, if it does drop the basis and then begin to push into that lower first, so from upper first, drop the basis to lower first, it would be considered mean reversion until it closes below there. Now, the big danger for bulls in this case is that if it does get a structure change on a close below this wick low of this current low side structure on a close, that wick low coming in at 36,715 and then subsequently closing below that lower first, I would be looking for, more substantial downside price action into some of those downside targets, testing these lows and possibly a retest of the monthly and weekly down there. Maybe more. But as it stands right now, still a bullish structure. Nothing's really changed. I do I do look at this as, three different failures at the monthly up here. These wicks didn't quite hit the monthly. This today's wick coming in just a couple bucks shy of the monthly there. Really does not concern me. This is to be expected. This is a huge, huge level. If this level is broken, we've already looked at the implications of this on the monthly time frame. And, just to kind of bring things back to what we've been talking about the entire time here with the Bollinger Bands, this is big for bulls and bears right now. If there's any hope left for, accumulation lower, bears have to fend off this upper second standard deviation and really push back on this expansion getting very aggressive. Right now, expansion is 28 over 23 on the monthly, so it's not quite aggressive. And a closure above the upper second would kick off aggressive upside expansion and really lean towards any kind of a pullback getting quickly picked up on the monthly time frame, meaning, we could even see a 3-candle high, but it's probably going to get picked up fairly quickly relative to the monthly time frame. So, less of a long-term accumulation and more of a, quick higher low is more than likely what we'd be observing if we did see a close above the upper second. But if bears can fend this area off and hold the bulls off from a close above that upper second, kind of gives them one more month, right? Gives them December to kind of try to push things down, get things into a reaccumulation zone, and prep for what is potentially going to be, ETF launches or whatever, right? It doesn't really matter. Having whatever the narrative is that you want to, pick up on. But in this case, a close above the upper second is going to kick off aggressive expansion to the upside. And from the historical perspective, we looked at this not too long ago, and I had to walk back something that I had mentioned before, which is that Bitcoin has never seen, a high directly above the upper second on expansion on the monthly, and that was incorrect. So I just did not look far enough back because back in 2014 to 2016, during this prolonged bear market, we did have a high that was directly above that upper second standard deviation of expansion. And you can see that, it did put in a 3-candle structure. It did not actually put in a high. Even if it did, though, it's likely it probably would have come down a little bit further and tried to base out maybe a more significant pullback. But more than likely, it would have ended up somewhere around like the 360, 350 area to around 430 to 450. Now, it did come down a bit to the 470 area, but then just continued on because, you see the tight compression on the monthly and then re-expansion. We also have a very similar look as Bitcoin is approaching the upper second standard deviation even on the monthly here from 2016. We had the downward sloping upper second, right? So the second standard deviation was still in a down facing position, not flipped up. We did see that the 20 simple is also downward sloped here. And we did see that the close open over here did not get above the wick high of the lower high coming into basically that was forming this bear market, right? So we had the uptrend, had the lower high, and then the lower lows. So bear market double bottom down there, and then a little bit of a 3-candle structure there, but not quite a high on a close. On a swing chart, definitely was a high and a higher low. Now in this case, we could see something very similar where we run this next high, 45 to 48.5 area, get above that upper second, and then come back down and retest. I really am hesitant, especially when looking at the quarterly, to call for like an immediate blast off to outer space if we see a close above the upper second. And the main reason why is because of where the quarterly is positioned with the upper second standard deviation being right around the prior all-time highs. It is slightly below there in the mid $50,000 area there at $55,000 to $56,000. Now, if Bitcoin did close the quarterly, which is going to be closing at the end of the December candle, then I would be looking for, this upward trajectory, which is just slightly pointed up on the upper second. But we would start to see the Bollinger Bands start to get that expansion to the upside if we do see a closure above the upper first in this case. And that is coming in at 40,300. So, there's quite a dynamic going on here as it relates to what you're probably going to see in terms of media narratives and even, crypto, Twitter, YouTube narratives that are going to be coming up here soon. My advice to you is ignore the narratives and pay attention to the chart. The chart is going to tell you everything you need to know well before you start hearing about the narratives, because the chart is telling you what's going on in the real auction in the background, and the news always is secondary to that. You're not going to announce a move, prior to prepping for that move, right? So it's not going to hit the headlines before you're already done doing what you need to do, because that's what the headline is based on, right? So charts first, news is interesting, but we can basically, suss out what that news is going to be when looking at the charts here. And this is very strong sideways and up consolidation as it stands right now. There's an argument to be made that there is a bit of a range here as well. So if you take, kind of the wick high that's governing the closes and pull a fib down to the wick low here that, was kind of the breakout retest area, right? Then we can see that, we're just kind of hanging out above this. We did get a spike down to the 618 there. But, this $37,980, $38,000 close is really what the bulls need to be looking for to start, getting above and running these wicks and higher. We can see the 1272 is coming in there at just under $39,000. 1414 coming in at just over $39,000 at $39,400. And the 1618 is, guess what? It's coming in right at 40K. So, there's a lot of different patterns you can be drawing on this, but it's just a wider auction range with higher lows in it that are creating bearish divergence here on the daily as well. And I've mentioned this quite a few times before. As we see the BBWP is cooling down, that is also reflected in the bands. I want to see another drive of bearish divergence. There is an argument to be made that there's enough drives for a reversal here, but because of the bullish divergence on the other side, I'd want to see another run up into the bullish control zone of RSI here to actually get another bearish divergence. Otherwise, it's just going to be building more and more bullish divergence on the other side. So if you are looking for a legitimate reversal, you're probably out of your mind, to be quite honest, until further notice. I mean, that unless things crashed out below the 26,500 low, which is all the way back here, that's any lows that are put in on Bitcoin above there are going to get bullish divergence off of that. Now, granted, that is going to populate. Actually, you know what? Would that populate as regular bullish divergence? No, it likely populate as hidden. If it did get down here, and that would be, let's see, where's the bearish control zone is at 33,300. So yeah, that would actually be regular bearish divergence in that case. And locally, right? Regular bearish divergence. No, I'm sorry. It would be hidden bearish divergence. Higher highs on price action, lower highs, or I'm sorry, higher lows on price action, and lower lows on RSI. So it would be hidden, much like what we're seeing locally here. And quite honestly, for price to kind of drop the range and really reverse structure here, I really would want to see another drive of bearish divergence, to be quite honest. And it might happen, actually. Let's look at this. Yeah, it actually would be possible still, even with the current structure. There might be another drive of bearish divergence if we do see a high put in here. But as it stands right now, it's still very, very strong. Move is not done yet. And the fact that you start seeing a cool down within a higher low range that's also putting in higher highs on a wick. Granted, the closes are coming in a little bit lower. This cool down should be a very big caution signal to the bears. Because if this just, it's more of a higher probability play to the upside as it stands right now. But to each their own. To each their own. There's plenty of people apparently shorting this and looking for very, very deep targets to the downside, and I do still find that a bit silly. And a bit misleading because they're looking for very, very, very higher term time frame downside in that case instead of actually trading, because that's not real trading to look for like $8,000 to $12,000 from here. That's not trading. That's silliness. Even if it were to get there, there's so many trades in between that on the lower term time frames as it would relate to higher term time frames, that it's just not even something that if you see, you should be entertaining as a thought. But, I guess crazier narratives will keep getting the attention. Now, the 12-hour is pivoted at 37,670 right now, as Bitcoin trades a little bit above there at 37,850 or so. And it is in the strong half of the Bollinger Bands. This is a sideways and up consolidation. So even if we did see, that low taken out, be aware of the lower second. That's where we're looking at these lows again down here, but on the daily, but be aware of the lower second around that 300 to 500 area, as this is setting up for a bit of a range unless it can start breaking out and getting expansion above the upper second standard deviation. I don't think this is, in the cards today. Maybe give it a day or two and see where the 12 hours at. It might even go back into a cool down, of course, if Bitcoin does drop this upper first standard deviation on the 12-hour and head towards the basis lower first area and retest this low. So that's somewhere around 37,300 to 500 to that low area around 36,800 rather. Getting a little dyslexic there. But it's something to pay attention to over the coming closures, that being today's closure. And, I would say watch Friday, Thursday into Friday pretty carefully as we come into the monthly close here. The 4 hours, another one that we should be paying attention to. This is cross down at the moment. I'd say $38,000 is the pivot there. Again, this is setting up more of a range play on the Bollinger Bands here. Of course, if we did see the lower second standard deviation close below, that is currently below the prior low here. And that would start to look, for expansion down further, testing into this low structure over here at around $36,000 to around 35.8, possibly 35.5 or so over here at this low. It's not my first take, but you can see that the setup is there for this. I would more than likely be looking for a bounce around either one of these lows here, coming in at 36,700 and the wick low slightly above there. Just call it 36,700 to 37K. If that is the case, if that area is lost, then it's eyes on that lower second, just below 36,700. If it did get a close, then I would be looking for a little bit of expansion down to the next area of interest. Now, if it does stay above the basis at around 37,500 on the 4 hour, and regain the upper first on a close at around 37, 900 to 38K, it's likely to go run the highs and higher again. If it doesn't just spike them, if it does start closing it above there. Man, my voice is going quick lately. But, I'd be looking for the highs to get ran again, basically, right into the monthly. I do think bulls might try to stage, a push up to that monthly closing area around 38.5 and try and get above that upper second. Look, I'm not the only person that's aware of the expansion criteria for volatility even. There's a lot of professional traders in this game now, and they're all looking at the same thing because the statistics for volatility expansion on the monthly is not just a Bitcoin thing. This is across markets. You start getting monthly expansion either to the upside or downside on any asset or indice. There's a very strong likelihood of a massive push in that direction, even if there is a pause in between. So this is not just something that I am talking about. I might be the only person that talking about it publicly, but in industry, guys are looking at this stuff very closely. You can equate this to like VIX if you're looking in the stock market. Although I don't think VIX is a great metric because it in and of itself, the volatility index can be longed and shorted, but it's something to pay attention to. So coming into, tomorrow night, which would be the end of the monthly or the monthly close, then we're going to really start looking closely at what comes in December and the quarterly. Now, that's going to be kind of it for right now on Bitcoin. I think, if you want the real long-term breakdown, refer to Monday's video where I went very in depth into the longer term timeframes, specifically the monthly, that we just recapped a little bit earlier in this stream. But I did focus solely on that first part of Monday's Macro Monday video, which you can find under the long form video analysis or the live stream tab on the Landy's Crypto Corner homepage on YouTube. We don't need to beat a dead horse in that regard. So let's go ahead and actually take a look at Dixie though, because Dixie did fulfill our downside target area, that being the 102.50 area. I think it even got a little bit lower. What did it get to? 102.46. So it did continue down past on the daily here, which is, there was a chance for Dixie to bounce at this low. It did not take that chance. And we went through the time frames and sussed out that, after looking a little bit deeper, it was likely to push past that low. If it didn't hold, it was going to head down significantly to around 102.50. The next big area, of course, to the downside is 102 even down here. And it's not looking good for Dixie Bulls right now, that's for sure. 103.15 is the pivot. It is trading slightly below there. So it's got a little work to do if it's going to try and bounce out of here. It's more likely than not to keep stepping down, much in the way that it walked its way up the upper second standard deviation, holding the upper first as support, and then just dipping down to the basis lower first area. That's likely what we're going to see here. Now, the big thing is, though, that we have much larger expansive ranges of the Bollinger Bands here. So, it's likely to keep grinding this lower second down and then using the lower first to basis as overhead resistance, right? And as it stands right now, it's getting pretty far away from this last high that was put in, which was that spike high to 104.21 here, with the close coming in at 103.88. So it's getting a little far away from that. It's likely going to head down further, try to put in another lower high, and then we look for that one to break. Now, if it does leg up and just start closing above this wick high, specifically at 104.21, we're likely looking at a little bit of accumulation and then a reversal on the daily. That is not in the cards right now, though. So next target to the downside is going to be 102. And then, we're looking at below there, basically 101.40 to 50 and then 101. So it's really just taking that 50-cent range at a time to the downside. And then watch for a low to be put in. And then once we see a low, I would look for a traditional 3-candle low structure here. Of course, from here, we would need to see closes above 103.12, which would also turn that pivot to the upside, I believe, on the daily for Stoke. And then specifically take out the wick high at around 103.32 to really start evaluating this high up here. Until we see something like that, it's downward pressure. And I believe that's going to, be reflected on the weekly pretty accurately here. 106.73 being that pivot. It's headed down. This is a compression on the weekly. So, we should not forget that this is a structure break on the weekly. So let's go ahead and get rid of all of the stuff I got here for support and resistance areas. And, just look at the structure. This is going to be one of two things. This is a trend break on the weekly, right? So we had the downtrend. We get the trend break. You look for a higher low on trend breaks like this. Now, if it does start to close back below this low over here, specifically on a close would be the technical at 99.95, but specifically below the wick lows here at 99.58 or so, then this was a deviation. But your first thing that you should be looking for when you see a trend break like this is higher low structure. And even, it can come down and make a double bottom or a slightly lower low. If it regains these wicks on a close, then it's looking for a trend change. Doesn't mean it's going to be successful, but that's what it's looking for at least. And in this case, this is the lower first standard deviation area coming in at 102.73. That is right where Dixie is trading around. This is where you would want to see the support come in and hold on Dixie if you're bullish on it, because it pushed from the lower second to the upper second, even ground up against it, came back down to the basis and lower first. So this is big mean reversion back to kind of the base of this bottoming structure here. If it does push down further, the lower second is right there at 101. So again, this matches up with the daily. Next big area to the downside, 102, and then below there about 101.40 to 50, and then 101. So this matches all of the confluent areas that we were looking at in terms of structure, rather, as I stutter, on the daily. So, just pay attention to it. Yes, it's still heavy pressure down. Yes, it broke the meme regression line to the downside. So it is heavily biased to the downside. But until we saw closures below the lower second, not looking for much more. Now, we are seeing compression. So lower second is going to move up week over week, provided that Dixie is below this basis band. We're going to start to see this compression happen pretty quickly. And then if it starts to close below that lower second, then we're still looking structurally at the close opens here. The 102 area on the closes over here, the 101, 30 to 50 area on the closes over here, and then the 99.95 closes over here to the wicks are going to be the primary targets to the downside. And then and only then if we see consistent closures below, like the lower second that gets expansion past those lows, then we're looking for much lower targets. But it's there's a lot of support under there, so I'm not calling for a collapse. But if this slides down any further, you're going to see everyone talk collapse of the dollar across all the headlines, even though it's just coming into a possible higher low retest. I wouldn't have confidence in calling a breakdown from here. And I'm seeing a lot of people that are getting a little overconfident with that. So just be aware of where things really are. It's pretty damn oversold on the daily. We see that it can walk it down further, but it's walking it right down into some bigger supports here. We're going to flip over to Bitcoin real quick here. There's another narrative that I want to kind of dispel here. So kind of walking through the things that I'm seeing being disseminated out there on the YouTube side of things, Telegram side of things, and crypto Twitter side of things. So open interest on the daily for Bitcoin in this case. This is the average across all derivatives that Coinalyze tracks. You can use open interest for from CoinGlass. They include CME here, which, by the way, you want to see, with all the ETF talk going on, you want to see CME leading in OI here, and it is, and it's starting to pull away from Binance. Of course, we know about some of the stuff that was going on with Binance regarding CZ, but CME was already up over Binance in terms of open interest, weeks, maybe even a month or two prior to that news being announced. But let's go ahead and take a look at the daily here on open interest. And open interest is really high. It's so much high. Well, in order for price to push up on the derivative side of things, we need more open interest coming on the board. Just look back in time, right? Open interest continues up with price in general. When it comes down, price generally comes down. Can you get divergences on the daily and lower time frames, both bullish and bearish? Yes. But as it stands right now, I want you to look back here. On the first spike up into the top side of this range at around $38,000, we saw open interest way up here at almost 12 billion. Now it did come down and actually retested the accumulation open interest levels here, and then look left. I mean, we're right around the open interest levels that we were back in July into August. So this isn't like out of control open interest. Remember that's when Bitcoin was just trading around the 31. It put in the high there at 31.8. So, this is not anything crazy. And in fact, if open interest came down and price, of course, coming down with it, then we're probably looking at, what I've been talking about for a very long time. If Bitcoin is to break down from this area, especially break down from 34,750 at this weekly and begin closing below $34,000, take out 33,405 at this wick low. Well, where's the next big area? It's the daily retest, which is untested. So I'd look for a daily test or retest of this long-term daily support resistance area at 32.4, and then a retest of the daily, weekly, monthly area, which this was the big breakdown on the monthly from the, was it Luna maybe? Was it Luna or was it FTX? It had to have been Luna. I think it was the Luna, Terra Luna crash. When looking at the monthly, this was, I think this was Luna back here. I think that was this candle. Yeah, this is the big leg down. And then FTX was just put in the bottom. So this was the close open structure. This was the closing candle at 31.8. This close open is where, it breached this ever important low at 28.8. So when that 28.8 low is taken out on a close, that was okay. We're looking significantly lower. Things went sideways for a little while, and then, one drive that was, significant. It wasn't as significant as that wick low, but, coming in at 15.5, which, by the way, if you were here, we talked quite a bit about look for, $15,000 to $16,000, and that's exactly where it landed. So right in the middle at 15.5. That was based on fib analysis, and then at the time, same thing that we're looking at on the dailies, Bollinger Bands and all that good stuff. So, but you can see that open interest even coming down for a retest likely points to a retest of that daily, weekly, and monthly area. Now, if open interest were to leg down and Bitcoin maintains structure within a range, it's more bullish than bearish. So, especially if you start seeing OI divergences, they do tend to favor the bullish scenario, more than the bearish scenario, unless we are at big trend breaks to the downside, and then we get a lower high on open interest, higher high on price like that. And the real caution there was like, okay, if open interest doesn't leg up on the new high, then you have a massive divergence. Over here, we have open interest did leg up, but it's maintaining about even on the closes while making significantly higher highs. So I'm not worried about any of that, and I'm seeing a lot of worry about it right now. And you would expect open interest to go up with price over time anyway. The fact that it isn't higher right now is actually a little bit shocking to me, to be quite honest. And part of that is a lot of people are disillusioned with what's going on with a lot of these crypto exchanges as it relates to regulations in various countries around the world. And then, of course, fear over, possible collapses again. Are the reserves real? FTX really did draw a lot of speculation from even veterans within this space who already knew that most of these Mickey Mouse exchanges were not solvent to begin with, and it's just rehypothecated Bitcoin across all of them, just lending to each other through various means of coins that they create, whether they're exchange coins or whether it's USDT or USDC, and then that's a whole nother issue in and of itself as well. But just about all of it's rehypothecated between these exchanges. But the beautiful thing about Bitcoin is it's limited supply. So when you call them on their bluff, they're going to collapse. Unfortunately, that takes, a lot of, people who just want to trade and make some money and maybe aren't aware of those potential issues, victims. And this is not going to change, by the way, when it moves to traditional markets. It's just all going to be legal and will be federally regulated here in the United States, at least. So you better get on board with the rehypothecation station, which would be options, which is borrowing on both sides, because unless you own, 100 shares of a Bitcoin ETF, which is probably, depending on what they open at, probably not going to be attainable for most. You're borrowing, you're using leverage. So that is, and you can leverage just long and short anyway, in most traditional brokers as well. But it's just basically a changing of the guard. So when looking at open interest, my advice to you is keep an eye on CME leading. You want to see CME leading the open interest charge here. And then eventually all of these, your coin glasses, your Coinalyze, your crypto quants, your glass nodes, they're all going to update to incorporate a lot of the traditional market data as well. So a lot of that on-chain data, a lot of this is going to begin shifting. And we're going to see a lot more, and it's actually going to make a lot of these platforms a lot more attractive too. Maybe even CoinGlass. I know that they're looking into how they can integrate the data from traditional markets, and they already are, along with CryptoQuant. But in terms of options data, volumes, flows, creation, redemption, all that kind of stuff. So tracking the coins basically from custody. And in most cases, it's going to be the Coinbase custodial trust. So once they verify, which those wallets have to be verified. So it's going to be public information. Once that's verified and they're funded, then it's going to be very easy to see the flows. There's no hiding. This is how Bitcoin infiltrates the traditional financial system, because it is transparent on the blockchain. And once you have the wallet, you can see where everything's moving. And it's very difficult to pull a fast one when you can see everything that's going on at its base layer. And it's a beautiful, beautiful thing. You should be rooting for Bitcoin. If you are rooting for shitcoins, great. You can make a lot of money on shitcoins, to be quite honest. Are any of them Bitcoin, though? No. But you can make a ton of money. Are any of them better than Bitcoin? No. Most all of them are companies. Most all of them are centralized. And the argument for Bitcoin being centralized is complete garbage. I saw the Charles Hackensaki, the ADA founder, which I like ADA, to be quite honest. There's good projects on there that I actually used and do use, but he's silly and doesn't know what he's talking about. You can't just subpoena, 3 of the big entities and 51% attack Bitcoin. That's silly. And it shows that he doesn't know anything about the network. If you would like to know more about the network, I suggest not only do you read the Bitcoin white paper, but you look up each of the different topics that are discussed so that you fully understand each subdomain that is discussed in the Bitcoin white paper, and maybe follow some of the Bitcoin developers that do it for free. Anyway, off my soapbox here and on to gold. Let's go ahead and look at gold here. Oh, look at that. Gold is moving to the areas that we have discussed. And, I questioned whether or not it would have the power to get up to this 2035 support and resistance area, and it blew right past it. Thank you. Now, this was the bias anyway, that it was going to at least test that area, and if it did get above, then we're looking to around 2081, so 2081 to 2090, maybe even 2100 on gold. Basically run this last high and possibly higher. It's probably looking a little bit overheated on the daily, but something that I did mention that I wanted you to be cautious about if you're trading gold is that if we did not see it pass the upper second at around this area, then we were looking for it to possibly come back down, but only if it closed back below the upper first. It did not do that. And in fact, it just green candled its way right through both those resistances at 2016 and 2035. Even back tested 2035 today. It's above the upper second. This is a consolidation look on the bands to re-expansion. Kind of the same thing that we were looking at on the 12-hour for Bitcoin and even 4-hour on Bitcoin, is until you see it start closing above or below the upper second or lower second, then you're looking for it to kind of range around. Otherwise, we're looking for it to get expansion. Some people would call this an impulse, depending on what type of technical analysis you do. This is volatility expansion to the upside, though, which will eventually target this 2081 to 2100 area. If it can maintain closures above this zone and the upper first. So that being 2016 to 2035 and remain above the upper first at around 2010. Now this will, of course, track up with price as it closes. So this is likely to be somewhere around 2015-16 to 2020. If you want to see this move continue, you're just going to be looking at price volatility and closes around that upper second. So if it does continue to close above the upper second, which is going to chase aggressively now, that is coming in at 2039 or 2040, likely to tick up to around where gold is trading right now, maybe even higher. Then you're looking for it to regain that upper second or maintain above it. As soon as it gets below it, it does bring the upper first into play. And wherever the upper first ends up after the next close, if it's in support, that's bullish. If it tests it and bounces off of it, that would be bullish to go test the upper second again, so on and so forth. If it does lose it, then you're looking down to the basis. And that would be somewhere around the highs here, 2000 to 2005, possibly, 2005 to 6 to $2,000. Maybe a retest of this higher low structure here, which is more of a sideways consolidation, but just under $2,000 at 1990, 1985 area by the basis. I think this is very strong. Probably going to keep marching on. $2,028 is the daily pivot. Weekly looks very, very strong. This wants to go, 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 gadget gold, go. And like I've said before, the biggest moves come typically in the overbought and oversold zones. And in this case, $2,042 on the weekly would, continue its momentum to the upside. But more importantly than the Stoke pivot right there is the actual expansion number here on the upper second standard deviation combined with BBWP volatility. So the upper second is here at $2,043. If it closes above there by Friday, I'm looking for this to significantly head up. And even if it loses it, it can come down for support around that upper first at around $1,993 to $2,000, I suspect, after close this week. But it's more of the expansive look here on BBWP combined with the closes above those Bollinger Band pivots really paint a picture of this wanting to take a good leg up towards the highs there and possibly higher. The monthly is going to be in a cool down to possible re-expansion if it can get back towards the highs, although this would be considered a mean reversion back to the highs from the volatility perspective. Any closes above that upper second standard deviation on the monthly, which is around $2,089 now. So it does put it above these local highs. Excuse me. Any closes above there would be significant expansion to the upside. I will caution you that that's not my first look. If anything, it's going to grind that upper second to some higher prices, but it's likely to, put in a high. And again, you can't fade the nice higher low here. This was something that we talked about quite a bit coming into this month. So looks good coming in towards the end of the month to possibly continue higher in December. Let's go ahead and take a look at traditional markets. We've got this big, beautiful weekly candle. So we will preview the weekly here today before we get into Friday's candle, which is our next live stream. This is the monthly. Actually, this this monthly is bullish AF. Wow. I think that it's likely to find resistance. This monthly is really bullish. Unless it falls apart below the upper first by, tomorrow's close. And that's down at 34,750. This is looking like it wants to run the all-time high. I've said this before. 36,300 is the upper second. That's going to close and move up pretty substantially. And right now it's around the close open on the monthly. We're looking at probably 37 pretty quickly thereafter for the upper second on the monthly. And when looking at the weekly is very strong, but it's going to double top, guys. I mean, even if it pulls back from here, it's going to be fine. This is a downtrend break here. We wanted to see it regain 35,000. That looks good. Remain above the upper first. If it does close above here by Friday, and that's at 35,250. I'm sorry. No, I was right. 35,250. Then we're still looking for this to head up to the upper second around these highs here at 35, 7 to 8, and the upper second at 36 to 36.1, possibly 36.2 if this does close open like this today, this week. And then we look at the daily, and yes, the daily is pretty stretched out, but it's all about volatility right now. And this is what's killing most people, is not understanding volatility. And the important area isn't necessarily this highs. The important area was this high back here. So, the downtrend break, higher low, and then move on. Even a little bit of a higher low here just below this wick low before regaining this range. It is testing this wick high, this spike high, which was a failure around 35,578, 580 area. But as long as it's above the upper first at 35,286, I would say 35.3 as it stands right now, then we're looking towards the upper second, in between the high here at 35,670 to 680 to the upper second, which is coming in just shy of 36,000. So that'd be the next big area of interest. If it does drop that upper first, again, we're looking right back to around $35,000, and this low here at around, where'd that come in at 34,800 or so. That'd be the big area of interest for myself. Below there, it would be the basis now, which has moved above this gap. The basis is at 34,650 to the gap here at around 34.4 or so. When looking at this as it relates to NASDAQ, we've got, it's essentially doing the same thing. Is it potentially painting a high here? Yeah, maybe. But it's a nice breakout locally, so not too concerned about it. It's still trading above even the wick high at just under 16 at 15,932. Now, of course, if it does lose the upper first here around 16,000, then I would be looking for it to head down to around 15,900. If it does start to break down below there, then we're looking to the gap again, right here at around 15,700 to 800 area. Basis coming in at 15.6, but realistically, you could see a spike down to 15.5. No issue there. Would you want to see it remain above this high? Probably at around 15,575, but a little gap fill on a spike wouldn't be out of the question. And even a move back to where you can see the lower first is coming in right at this low at 15,100. But even a move back to 15.3 to 15.1 or even 15 even is fine structurally. Now, remember, that's a big drawdown, and you're going to see, oh my God, the sky is falling narrative all over the place if that were to happen. But realistically, from a structural standpoint, it's just fine. When looking at the weekly, of course, it's pushing that upper second standard deviation. This is a trend break, and you do want to see a higher low for long-term trend. And, it's getting a little bit slowed down here at the upper second, which is not, out of the ordinary by any stretch of the imagination. But it, very well may just grind it up to the all-time high here. The big areas to the upside being, above 16,000 to 16.4. It's around 16,350 to 16.4. And then the close there at 16,650 and the high up there at 16,760, 770. I would eventually look for this. It's legit expansion on the weekly. And it's aggressively expanding. This is a nice contraction to expansion as long as it's above the upper first. It's looking to continue that aggressive or more aggressive look on expansion. If we see closures above it, it's very aggressive expansion. So that coming in at 16,151 this week, if we see a closure above it, very aggressive expansion to the upside. Probably hit some of those deeper targets near the all-time high pretty quickly after that. But it could just grind it out, continue expanding to the upside. Upper first is, above this last high here as well. So even a retest of the high at, 15.5 or so, fine. As long as we're seeing closes above the upper first. Pullbacks, though, to the basis, not out of the question. Would not also, would also be a bullish pullback after a breakout like this as well. Unless we saw the lows drop, just like on Dow, until we see lows dropped, it's not a deviation, it's a breakout. Looks fine. You're just hunting higher lows until proven otherwise. And in this case, the base is coming right into a major area of support now at around 15,200. So looks fine. Looks like it wants to, continue up over time, maybe even more aggressively if it can get a weekly close above that upper second. BBWP is just now lifting off. Weekly looks good on Stoke momentum. It's 14,200 is a pivot. So no concern about that catching up anytime soon, even on pullbacks. And then, then you got a monthly that looks like this. And if the monthly closes anything like this, all-time highs in play. Upper second standard deviation likely to be pushed at 16.3 to 16.4. Again, that's right at the closing all-time highs. If it starts to push the closing all-time high on the monthly, it's going to leg up to the all-time high, at least on a wick basis for a test. And this is a beautiful high or low structure on the monthly time frame. And if you're fading that, you are crazy. Now, so unless this dumps out between today and tomorrow, you're crazy if you're fading this right now. You're a nutcase, and you're front running. So the only time that I would be like full on, like, yeah, I'm looking for this to take a massive leg down is if we see, a high put in that then takes out this last low, because then on any other bounces from there, it's, otherwise you're just, why catch a bullet to the face? I mean, that's on the upside, you're catching a bullet. On the downside, you're catching knives, right? So catching knives on this downside until proven otherwise. And here you're just catching a bullet. Why eat a bullet on an upside move like this? Massive. And silly. So 15,730 is going to be the pivot for that as well. Volatility is still very high, but it can remain high on the monthly time frame here from the perspective of the Nasdaq's Bollinger Bands here. Now, am I totally confident that this thing's just going to rip and keep marching to the upside? No, but at very minimum, this is a very bullish structure within a bigger accumulation. That could retest the highs. Could it double top there and then come back down? Sure. I'd only be concerned if we saw a monthly close, in terms of, I'm not really concerned because I'm going to be trading it if that happens anyway to the downside. But monthly closes back below, this spike low at 14,000. Other than that, looking up. Let's go ahead and jump on over to, let me pull this out a little bit further here. SPY. We can see that SPY is still playing around in the area that we had identified as being the important area. This 453 to 459 or 460 area. As long as it's closing above the upper first, that leaves open a run to 459 to 460. Could it be painting a high here? Sure, maybe. If it closes below the upper first, be aware of this low at around 453, right at the support now that has been tested. If it does lose that area, then I'd be looking somewhere around 450 to this low here at 448 to 450. So basically high to low here. And below there, the gap fill at around 446 to the basis at 444. And below there, by the way, this base is probably going to be right here at a gap fill area. So it would really start to look like, a basis to lower first retest if it does start pulling back from here. And that's really around 446 to a gap fill around 440. That's likely what we would see if it does start to lose this area up here. Otherwise, it's really it's 460 to 465 at the upper second in play until it puts in a high that starts to lose that upper first and its local structure here being this high where this low just tested. So it is a red candle. Not too concerned about it yet. Is it, running out of momentum? Is it starting to contract on the Bollinger Bands? Yeah, I'd be looking first for, a pullback into, high level consolidation and then probably another upside push. 457 is going to be the momentum pivot. Weekly is pivoted at 410, still up, still getting expansion. This looks very good. Was it already, pretty expanded? Yes. This would be an expansion to the downside and then, run back to the top side, running from one side to the Bollinger Bands to the other, unless it breaks this high, at 460, could become bearish over time, especially if we start to see momentum turn. And then we see a violent rejection at the upper second area. Otherwise, if it does start to close above this high and push that upper second, it can definitely grind it there. And that's also coming in around 464, 465, which is where the daily is coming in. So we have a lot of confluence there. The upper first, of course, is also coming in to an important area, which is where the upper first is around that daily as well, which is coming in at 451, 452. If it does lose that, then the basis is in play. And guess where that is? That's coming in at 440. That was that gap fill on the daily that we would be looking for initially and then come back to it later. Otherwise, upside's the name of the game. Weekly looks very good and strong still. When looking at the monthly, again, you're crazy if you're going to fade something like this. Now, it's not quite as strong as NASDAQ, not quite as strong as even Dow as it stands right now, but upper second still in play. Guess where that's coming in? It's 463. So it's basically 465 if this pushes up a little bit more over the next day or so. Otherwise, it's still good above the upper first, which is right there at this spike high, the wick high of this prior low. And that's coming in at 437, 440 area anyway. So a retest, not out of the question. From the monthly perspective, nice bounce off the basis. This is likely going to solidify technical higher low. Still want to see it close above 459 though. That is my criteria. Some might even want to take the wick there at 462, just under the upper second. If it's going to close above 459, I need to see it closing above the upper second to go around the highs. And that's coming in at your 470, 475 area, and then up there at 480. So looks good from the monthly perspective still. 447 is going to be the pivot. Now, what I will tell you is it is very, very likely that this closes, this pivot comes down a little bit. We will see, of course, and follow up on Friday. So let's go ahead and jump back to Bitcoin. We'll throw on the DGen chart, and I'll peruse the chats here. And 30-second chart. Look at its double bottom. Look at that candle. If it takes out the high at 37,855, then it's moon time, baby. At least up to 37,866 and possibly 37,889. Anyway, we'll stop looking at the DGen chart. Well, I will keep it on the screen here. We're going to go ahead and turn on some tunes in the background. And yeah, and then we'll get into seeing what you guys have to say here. All right. Let's go ahead and, all right. Hi, Jimmy. Good to see you, buddy. So you got a lot of students, I hear. Well, I didn't hear because I was teaching some of them in your place. A lot of new guys, fresh blood coming into the markets. Yep. So got some series, some SIE, some series 24, series 57. You have a series 6 and 7. Okay, cool. Cool. Those are all for those that aren't aware that are watching this publicly. Those are just FINRA exams that are required at this particular trading firm in order to participate. Although you can work under someone for a while until you obtain your certifications and your licenses, I should say, and then you can get insured and licensed and insured and bonded for yourself as well. Yes. Okay, cool. I'm going to go ahead and look at the public chats here. So we got public chat on Twitch and YouTube. Let's go ahead and take a look. Hello, everybody over here. Go ahead and give a like and subscribe if you'd like to chat. You do need to be subscribed. That's, of course, free. And that is be something that I have to keep going because every time I start one of these streams without having the chat on subscriber only mode, I get bots in here that start spamming promo SM and like all kinds of other garbage. Otherwise, let's see what's going on in here. Ivan, good. Thank you. Bobby, hello. Spin, hello. Roka, hello. Good to see you. Sam, good to see you. Baba, good to see you. Cheryl's here as well. Awesome. I'm getting a question from let's see. Hoping Bitcoin would get to 38. Yeah, it just got front run by like $20 on spot. I think some derivatives got to 38.5. I haven't checked though. Can you speak to the upper and lower second standard deviations? I speak like they are very important. Well, the importance is that governs expansion and contraction of volatility, aggressive expansion and contraction of volatility within a set range or defined time frame. So when you're looking at standard deviations, you're looking at standard deviations from a mean. In this case, the mean is the basis band, which is a 20 simple moving average. So a first standard deviation, second standard deviation, and third standard deviation are 1, 2, and 3 standard deviations away from that mean. Now, if you want to get into the math behind it, I actually will have a video where I go into the math behind it. You don't need to know the math, but basically, based on the volatility of the bands, which, if you like, you can actually look at the, you might be able to look at the source code. I don't know. Actually, you might not be able to look at the source code on that one. Which ones could you look at the source code? Bollinger Bands. I have some here that I've got some just where I've been messing around with stuff. This might be one that I can show. Let's look. I guess not. I've got too much crap in here. BBWP. Alright, so no, variables. Yeah, I'm not finding one that I could whip one up for you, but I was going to look for one that actually has the math in it. But basically, you're looking at the width of the Bollinger Bands being standard deviations away from the basis, and then they expand and contract depending on the volatility of price away from the basis band. So in this case, this gives you an idea of continuation or reversal zones. And typically when using a regular set of Bollinger Bands, you're only going to have an upper second and lower second standard deviations. And they just call it like the upper Bollinger Band and lower Bollinger Band, which is just 2 standard deviations away from the basis, which is a 20 simple. And the John Bollinger, who created these, has identified that the Bollinger Band, the upper Bollinger Band and the lower Bollinger Band will act as either continuation or reversal areas. So the upper second is very, very important. Lower second is very, very important. So when you're looking at like a regular set of Bollinger Bands, which you could throw Bollinger Bands on here, just a regular old set of Bollinger Bands. This is what it looks like out of the box in TradingView. And if we go here, and I think we can show source on this, I think they're probably using the TA, SMA, and EMA. Yeah, they are. So this isn't using any of the actual math behind it. I'm going to have a video where I review like a spreadsheet of how the math is calculated so that you can actually calculate it yourself tick by tick if you wanted. Of course, you're not going to actually do that because that's crazy. No one's that insane, except for John Bollinger in the early days. But you can see if we get closes above, we got to close above the upper second here on the 30-second chart. It's giving us the bias that it closed above this close open. So you combine it with structure, that we're going to get expansion to the next big area, and it did expand to the next big area, which was the wick high. If it closes above this high here on an open and above the upper second, then it does bring into play, of course, this high and this high, which both of them got ran. And then the next big area would be to look to this high at around 37,856 or something. So that would be continued expansion. Now, of course, if you want to do it the traditional way, there is Bollinger Band. There is Bollinger Band width and percent, and those are two separate indicators from John Bollinger. And the width tracks the expansion of the band's upper band and lower band, which is just 2 standard deviations away from the basis here. Again, that's a 20 simple moving average. Pretty standard stuff. But the width and percent are 2 different calculations. And the problem is because, you know, the percent is from 0 to 1, and 0 being the lower band and 1 being the upper band in terms of where price is, and then the width being the calculation of the band's expansion not being totally clear to everyone. Caretaker set out to solve that problem by combining the width and percentage into one indicator, and that became the BBWP, and that's, in my opinion, the gold standard. And that's this indicator here. So you can see that contraction of BBWP equates to contraction of price action into a range, and then you start to see the compression in the bands, and then you see re-expansion. We got started to get re-expansion as it closed one candle slightly below the lower band. Now it did reverse, so it did not continue. Closed slightly below, we got spikes down, but it did not continue. It bounced off of the lower second and then ran to the basis and then the upper second. So that began to expand the bands a little bit because it ran from one side to the other. And the way that BBWP works is it cools down the fastest when price is closing right on the basis, or right at the 20 simple. So in this case, the 20 simple was closed, it was expansion. So we saw an expansion over here, down, where it was just kind of grinding that lower second standard deviation and expanding down. And then we saw price go sideways. We saw residual expansion occur, but BBWP began to cool down because price is moving back to the mean. So it's returning to the mean, which is the 20 simple. So price was going sideways and up while the 20 simple came down. We get a cool down. It spikes to the upper second. It fails, but it does pull away and close away from the basis. It then reverses, closes towards it. We get a little bit of a mixed signal there, not a very strong signal on BBWP. Comes back down to the lower second, or the lower band in this case, and we see it just kind of go sideways. As it bounces off of that lower band, we see the bands compress. We get a little spike up, and because that spiked up above, volatility did uptick. We did see that the the price closed away from the basis band here, thus increasing volatility a bit. And then we see a move right back down to the lower bands, and we see volatility cool down because this is technically a return to the mean on the lows as it cooled down and moved right back into the basis again. So you get a little bit of a cool down. Then we start pulling away from the basis. You see that it starts to get some expansion. We get a little spike down here as the bands kind of reverse and flip the 20. And then it just kind of bounces off the moving average. You can't really see it on the stream, but the moving average is pointing slightly down and then up on this little 3 candle structure here as it tried to move back to the basis, and the basis was rising in this case. But then it started to expand once it started closing above the upper second. You see more aggressive expansion. Now this is not really very big expansion right now. This is aggressive expansion right here, which was a move off the lower second straight up to the upper second. So we saw a cool down to expansion to the lower second because it's expanding away from the basis to the lower second, bounces off of that, and then runs right to the top side, keeping its volatility high because it's running from one side to the other. This is something you often see in lower term timeframes when looking at Bollinger Bands. But I mean, you can see it generally acts as a reversal area, but it's typically, bounce, return to mean, bounce, return to the mean or somewhere around the mean, bounce, bounce, bounce. Once it regains it, runs the upper side, bands, and then we see it turn, bounce off the lower, bounce off the upper, bounce off the lower, bounce off the upper. It's just ping-ponging between the bands. And when you're on really low term time frames, you use the 20 or the basis as your governor for your direction overall. So until it reverses on the other side. It's actually really easy to see. I just prefer having 3 standard deviations because of volatility. But it's the same thing. I mean, we're on a 30-second chart. I don't advise that you trade on a 30-second chart unless you're a complete degen, Bobby. But I mean, it's fairly clean. I mean, basis is the same to the downside. Use bias to the downside, keeps re-expanding, and then using the basis and lower first in this case as a governor to the downside, or maintaining trend to the downside. It flips it, closes above the basis upper first, tags the upper second, comes back down, finds support at the lower first, lower second area, bounces up to the upper first, upper second, lower first, lower second, blah, 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 blah. You see the turn down. Why? It broke structure as well. This is all an uptrend. This is now a downtrend. That's reflected in the bands. And then we see expansion to the downside, compression, and then reversal set up to a compression over here. So a little bit of higher low structure. Maybe a double top right here. If it takes out the low, then it's compression to neutral sideways price action in terms of trend. And then we look and see if the low is going to get taken out at 37,791 or whatever this is. But pretty straightforward. The way you need to think about the bands is the upper second and lower second are either going to act as one of two things. It's either going to be a reversal area, or it's going to be a continuation area. Now, typically, you're going to see reversals off of support and resistance. So to the downside, you see a reversal off the lower second that's also at support, then it's probably going to bounce. Then you look for a trend change. Or if you get to a support, like let's say we get to the low side and we see expansion below the lower second standard deviation and the low is breached, you're getting expansion to the downside, right? So you're breaking a support plus you're getting expansion. So you're getting volatility expansion through a support, or you're getting volatility expansion through a resistance. That's your continuation. So you get closes either to the downside being below the lower second standard deviation. We're looking for expansion to these lows over here at around 37,800 to this next low at 791 or whatever. And then below there, if it breaks down from there and closes below the lower second, we're looking for further expansion to the next set of lows, so on and so forth. You just step it down, you look left. First, you look at the highs, and then you look at the lows. So there's a high confluent right here with this low over here. So it's this high, this low, and then there's a low or a high directly below it. It's confluent with this low. And, there's a high over here that's confluent with this little spike high, and now you're starting to get into muddy waters. We got a low and a low down here. So if it starts expanding through all of those, it's continuation. If it bounces off of them, that's where you're looking for a reversal. And you can see right here, lower second standard deviation found support right here, and it reversed. So instead of getting continuation, it got continuation for one candle. It didn't actually, it probably just closed open. It didn't get, we're on a 30-second chart, so it's going to be very difficult. 30-second chart, by the way, with triple Bollinger Bands is pretty clean. I'm not going to lie. I can't dog you too much, Bobby, if you're using this, because it is pretty clean, pretty easy. By the time you get into a position, you could, price structure could change by the time you get your fills in. That's the only problem. But there, reverse off the lower second. We're looking for the upper second, upper first, upper second. If it takes out the high here, then we're looking for it to grind up against that upper second, possibly it closes above. You don't see too many closes above or below the upper second, lower second on a 30-second chart because it is so reactive to price. But, you know, the hourly is going to be more appropriate. This looks like, you know, if it puts in a low, by the way, support's right over here that it tagged. So lower second at support on the hourly, looking for a reversal. If it closes above this wick high here at 37,908, then we're looking for it to trade up at minimum to this next close open here, which is right at 37,994. So right around $38,000 by the basis, which is at $38,000. And then from there, we look to this little lower high by the upper first at 38,100 to 200, 38,150 to 200 or so, somewhere around there. And then if it takes that area out, we're looking to somewhere around the upper second at the spike high at 38.3, right around these close opens here, to the upper second, which is coming in at just slightly above there at 38,340. So, you know, this is where you're looking at, you know, if it does break down and start closing below the lower second, it's going to get expansion on a trend break to the downside, or on a support break to the downside, right? Because it already broke through these highs over here, took out, you know, and spiked into these lows. Where you're looking next, you look right there at that high. If we got closes below the lower second, it would also be closes below this high. So you're looking down to, you know, the next big areas, which is, you know, this high down here, maybe this order block over here, 37.5 or so to 37, you know, 3, 4 area. And then this high over here, which is right around this low. So you could take the low at 37,250, so on and so forth. You let me know, Spin, if that helped. It's a long ass explanation, but I wanted to give you a lot of examples in addition to the explanation. So you guys let me know if that helps make some sense as to the importance of the volatility levels of the Bollinger Bands. In this case, you know, you can always get the Landy Bands. They're free. They're in the video link in the description of every video on YouTube, which is where you guys are chatting. So they're just not publicly searchable. And out of the box, it's got some other stuff, just indicators. Purple is a close above the upper second. A purple with a yellow, that's not yellow, that's red. Purple dot with a red triangle either to the upside or downside indicates a close above or below the lower third, or upper or lower third standard deviations. So you'll see it to the downside as well. Purple close below the lower second, just because sometimes it can be red on the edge and you can't see. So like this one did close below the lower second. And then expansion to the downside, we saw the closes below the lower third, which is the purple dot with the orange triangle, the red triangle. I'm just going to call it every color. I am a little colorblind, so I believe they're supposed to be red. They should look red to you. They don't quite look red to me. They're yellowish orange, but my apologies. They're supposed to be red, though. Just noting that, like, hey, this is getting kind of critical in terms of, like, it's at least going to go sideways at some point. Man, I made some good damn coffee today. Sorry. Let's go ahead and look here. Not going to look at McDonald's, man. Unless you're actually trading McDonald's stock, there's no sense in me looking at it. I mean, mainly because it's just so far afield of what our conversations are right now. Sorry, Evan. 4-hour close is coming in. You're correct. Yeah, 2 minutes. Oh my god, it's a Mickey Mouse double top on the 4-hour, 12K incoming. Well, I'm not just going to look at random stuff to explain it. It's got to be something that's actually going to be helpful to you. Iota. Bobby. You always find And the reason why I say that, Ivan, is because I know you're not trading McNaughton stock, so suggest something that's actually relevant for me, buddy. IOTA on Binance, yes, it went up. Look at that, by a lot. It's a breakout. That's some big volume. People got wiped the hell out on that move up, that's for sure. Let's look at the daily. You know what? Not gonna lie, like local structure, you know, it's a breakout. This thing could very easily come down quite a bit more though. It's trading at 27 cents. Easily pull back to 25 to 23 and it stays bullish. It's a local breakout area as well as all the way there at 20 cents. So as long as it's above there, it's looking fine. But this is, you know, not unexpected by IOTA standards here. Let's just turn off, or let's go higher time frame, like a weekly. And then we can see that IOTA is, you know, kind of just downtrending in the longer term. And could this be a legit weekly breakout? Sure. Looks at nice higher low in the weekly if it can close it like this. Yeah, above 20 cents, basically where it broke out from. That's you know, it's probably gonna head and try higher, at least to this area up here. If it can close here higher, which would be somewhere above this high here, we'll call it 25 cents or so. Then it's, you know, probably, you know, it's looking to regain this. It would be looking to regain this low. If it can regain this low, which is kind of where it's trading around right now at like this 26, 27 cent area, then it could potentially push for the high side there at like, you know, 30 to 35 cents, you know, maybe even 38 to 40 at these little wicks here, these little spikes. But you know, it's I don't really have an opinion on it other than this has been a very long downtrend, and this is, you know, this is significant because this would be its first, you know, major higher low in a very long time. I suspect it would. I do kind of suspect that even if it has more on it, it goes into a longer form sideways consolidation. But yeah, I mean, the volatility is real, so just be aware of the volatility to the downside. In the monthly, say in the same areas, 30 to 35, and then you know, 35 to 40 cents. If it can do it, like, you know, I suspect it goes into a little bit longer form consolidation for a little while. But you know, maybe it defies what the hell I think and has decided that it's time to go into a more macro, into another macro lower high. I mean, it couldn't even get back to its highs on, you know, from 2017 and into a much more liquid market in 2021. So, I mean, I don't have high hopes, but this was a nice move. I bet you anybody shorting, well, I mean, on the daily, it's coming into dicey territory. Because you would be expecting a bounce around this low anyway. Maybe not a bounce that aggressively, but yeah, it was coming into the lower second on compression after expansion. I mean, this was telling you not to go full bore short. So it must have been building up a lot of OI on the short side and then just got absolutely nuked. Because you don't, I mean, a big buy on spot, while also hammering the market buy button on derivatives on an exchange like Binance for a shitcoin like IOTA. I mean, that's the way that I would wipe everybody out. A couple big buys on the spot side to hold things up as they try to fight me off on the books, and then just keep laying down fire on the bid side, just wiping their ass out. Because you'd want to get into a good position. Otherwise, you're gonna end up with such slippage that you're filling over the highs. So you want to have like a dual approach if you're gonna do that. I mean, I wouldn't know anything about manipulating the books like that on illiquid shitcoins. That would be crazy. But in theory, that's the way that I would play it, and that's probably what happened. See a bunch of short OI built up. Nuke time. Take your liquidity, thank you. And I imagine, then you got a bunch of people that are chasing, along with the bots that'll chase too. So you can exploit that pretty easily, and then maybe it gets continuation. Maybe it wiped out the books so much that it can continue higher, but I suspect there's going to be liquidity coming in on the other side. Might see some spikes in lower term timeframes to the downside. It is so far looking good. Expansion to re-expansion here, higher highs. No big, it's basically, saw everybody trying to short this wick high right here, right? That gave it its nice little leg up. Like, it's just swung the high and it's coming back down. Short time, boom, up, right in their face. Have fun. Part of that's algos. That's not always, just people in their degen trading, but a lot of degen traders already got wiped out on this first couple of candles up here in the last, I guess since it was about 4 a.m. my time. How is Link doing? I haven't looked at Link today. I did look at it the other day for myself. Yeah, still looking good. Yep. Still looking pretty good here. In terms of its consolidation, it's looking fine. As I mentioned prior, you want to see consolidation above that 12 to 12.5 area. Now it's really going to be, as long as it's above the wick lows to the close here, it's going to eventually march its way up to around 19 to 20 bucks. So pretty simple analysis here, especially when you take into account the way the bull bands look right now. It's that lower seconds in a position to catch that nice demand zone. When looking at the weekly, that's even above the upper first right now. By this weekend, it probably won't be. If it does lose that, then I'd be looking somewhere around that $10 to $12 area again. If it loses the $10 to $12 area, then we are looking for probably a move back down to around 9 to 950. Otherwise, upper second still in play as long as it's above the weekly upper first, which is probably going to come into play here on the lows. Upper first is above the area that I wanted to see the breakout from, and the upper second's in play at the highs there at around 16 bucks, right around the closes here. So if it does run the closes, it's probably going to run the highs again. Doesn't mean it's just going to go right to 19, but if it does start to run 16, the highs are back in play at 16 and a half and above. And if it starts to drop, this wick low, then we're looking for some downside. 1285. Looks good though. It's starting to run out of juice. Initial cross below 1575. trading below there by a bit here. It's got quite a few days to go though. So 2-day looking like 2 days ready to cross back up above 1480. It is not there right now, so it is trading below. So 3-day looking like, just curious. $15. 4-day is 1621. I just, the daily is painting a consolidation. So until you see it close below the lower first at 1382, it's likely to test around this midline and higher to around 1531. So it's 1457 at the basis to around the highs here at 1531. It does, start closing back below the basis and specifically below that lower first, then the lows are in play and lower into the support areas that we talked about. And right below that 1225, there's a lot of resistance was built up here, and you can see the volume candles on the way up into the $10-11 area, the deeper $10 to $11 area right here at around 1090 to $11. Got to close there 1167 to 11.5 over here. This is actually, no, this was 1120. So yeah, below there, take it one step at a time. There was a lot of rejected volume here that it broke out from. So I'd look for it to step back somewhere in the mid $11 region if it does start losing the lower second, and specifically around the 1225 to 35 region, which right now is the daily lower first. So there'd be time to evaluate if it's going to reverse off that area and come lower, or if it'll just deviate this low. If it doesn't, just test it and bounce. Just remember, just because you need to see it retest doesn't mean it will. Just because it's the same, it's the age-old argument of, oh, there's a gap there, it's got to fill it, man. I'm gonna put some borders there, and then it just runs away from it for like 3 years. You're like, shit, I should have just bought. It's always that kind of a scenario. I mean, right now it's a little hot to trot. I'd like to see just some sideways consolidation on Link and then come back to it. I was previously trading, this was expansion to mean reversion, and I was trading the move on this candle up back to the upper first, and it hit it. I wasn't looking for much more anyway. We saw 2 rejected highs in this area, and now this would be the third, but then it's coming back down and just kind of holding sideways. So volume is dropping significantly as well. So looks like a sideways consolidation on the bands. So I just played as support and resistance until proven otherwise. Pretty easy setup, actually. Yeah. Let's go ahead and take a look at Bitcoin on the 4-hour here. Since it did close a 4-hour candle. I believe it closed a 2-hour as well. Oh no, it's painting a sword. It's painting an evening star reversal. It's all over, guys. 8 to 12K. That's my target from here, guys. Don't worry. It'll get there. Trust me. Also, I heard about this really good project that you should invest in. I'm totally not going to use your liquidity to dump this coin. Or have a deal with you and then I forget to actually shill it. And then try to negotiate for more, even though I didn't shill your shit. If you know who I'm talking about, then you know. Alright, 4-hour is giving me nothing here. It's still painting just a high as it stands right now. The there's nothing interesting here in terms of volatility, expansion, contraction. It's just return to the mean. It's basically below the upper first. It's trading back towards the basis at around 37.5. That's what I'd be looking for. If it drops it, I'm looking at around 37. WorldCoin? No. You know which traders I'm talking about. What did the 2 hour close at? Yeah, the 2 hour did get its close. Downside angle below 38.3. Hourly is going to be coming off the lower second, like I had pointed out earlier. What's its momentum going to be, though? Momentum is shifting on the hourly, and the hourly is going to, heavily influence the other time frames here. 37,775 is the momentum pivot, and if it closes above there, it's likely we see it attempt to put in a low on the hourly, a consolidation low structure. As it stands right now, on a close, you want to see it take out this last high. It's probably already painting a low on RSI. No, it's not. But it will paint the technical low if it can close back above, what did I say earlier? 37,900 or 37,908. If it can close above there, it'll put in a technical low. But even the bearish control zone is down here at basically 37,475, so it's 37,500 down there. I'd like to see a test of that area, actually. It's going to get bullish divergence on the way back down unless it nukes through all these lows over here. So that's what I'd be looking for. If it nukes through all those lows, it's probably going to set up a daily reversal, and we start looking at 37, 36.5, 36.2, the areas that I talked about in the beginning of the video. Or stream, not a video. It's a video if you're watching it after the fact. But the areas that I talked about as areas of interest to the downside in the beginning of the stream. I think that's going to do it for me today. We do have a Friday live stream coming up where we will recap the monthly close. And then we have, don't forget, we have very important closures coming in this weekend. So we'll get the monthly close on at the end of Thursday. We'll talk about this on Friday, of course. So we'll be watching that upper second, somewhere around 38,500. If it can close above, that will solidify my bias that, not even my bias, but the bias of the volatility metrics here towards more aggressive upside expansion of price action within the Bollinger Bands, and then we come back to it. But we have a 4-week closure this weekend. So big one. Note where the upper second is there, 35,879. The 3-week closure, also this weekend. So, we have a 4-week, 3-week, 2-week, weekly, right? So in between the monthly, we've got the 2-week, 3-week, 4-week, if you'd like me to say it that way. The 3-week is going to be upper second for aggressive upside expansion in this case, which it's getting close. I think it is going to confirm this cross for expansion of the Bollinger Bands as they are already expanding to the upside. I think we get follow through. And especially if we see a close above 38,056 bucks. So even if it doesn't even have to close that monthly in the 3-week, but 2-week is already above that upper second. So if it can maintain the 36,500 area, we're going to see this continue to get expansion. Now I will note that it has been lower highs on expansion here for a little while. It doesn't mean that it's going to remain that way. So in terms of volatility, you just need to see it close above the upper second. We're going to see this uptick again. There is an argument to be made that it's just getting less impulsive over time in terms of expansion, but we're likely to see this start to rocket soon. Main reason why is the monthly is no longer in a compression. It is now in a position for expansion. So we're likely to see that 2-week begin to really get its expansion game on. We still see upside expansion on the weekly here. This is not over yet. Even if we get a BBWP cross over the moving average here, it's still in play with residual expansion, and it could very easily re-expand before the moving average turns. So, yeah. Oh, Spin, you haven't heard my announcer voice yet. Announcer or radio voice. Yeah, we can get into some radio stuff if you want. You have to give me some radio shout outs that you'd want me to say though, because my brain is just filled with charts and numbers, and I go to sleep and I'm dreaming about Bollinger Bands and volatility levels, and yeah, that's my life. I don't count sheep, I count Fibonacci numbers. So, I think that's going to do it for today. Gonna leave it there for today. You guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. Turn that leverage down. Don't get blown out on a 60% pump on a crap coin. I don't know why I'm choosing not to swear now. That's just silly. But, and then, of course, as always, be safe, because it's getting absolutely insane everywhere. And no one's happy about that. It will never stop being insane, by the way, so just always be safe. And with that, I'm going to keep stalling while I set this timer here. And we're going to put this out to 12:30 my time. And we're going to switch over in just a minute here to just the ending screen here. And again, thanks for hanging out with me. If you have any questions, go ahead and leave them in the chat there. I'll try to address them coming into the next live stream. Other than that, look for a Bitcoin in 60 seconds video later today, where I say target hit to the upside and then give you the updated targets, which are probably going to be about the same. But if you'd like to support me, go ahead and watch them here on YouTube. Give me a like, give me a comment. Make the comment relevant to the video. That's more helpful. And then also you can catch me on Twitter, X, whatever the heck it's called. Other than that, thanks for hanging out with me. You have a wonderful, wonderful day. Landy out.